I believe that we should be creating, as we'll talk about, our financial freedom formula, which is our horizontal income divided by our vitality factor number. So what does that mean? The passive income that we've got coming in every single month exceeds our cost of living, right? So if this number is greater than 1.3, you are financially free, because that would account for taxes at a 30% blended tax rate. So in other words, if you sit down and you figure out your vitality number, what it takes you to live per year or per month, however you want to break that down, and you've got more than that coming in without you doing any work, you're financially free, right? Which is everybody's goal, I imagine. Not that people want to retire and sit on the beach. There's a time for that, but for me, it's a very short-lived amount of time. I just want to do the things that I know are really important to me. Some of that is contribution, and some of that is other things, helping my kids. I want the time available to do that. Whoops. Then another term that we talk about is blended tax rate. So a blended tax rate is the average rate which you are taxed on all of your sources of income, okay? That you pay taxes. So if you're paying 40% on a W-2 check, because even business owners have to cut themselves a W-2 check, but then you are also getting some capital gains, which is at 20%. Maybe you've got some depreciation that you're working against all of that, and your number comes down to 12, 8. If you don't know what that number is, I know a lot of you have been hanging out with me for quite some time, could tout that number off the top of your head, but the goal is to not be ignorant to what your blended tax rate is. And we're going to talk a little bit about tax drag today as well, but that isn't save taxes is another income stream, right? So understanding your blended tax rate is very, very important. Today we're talking about compounding wealth. And tax drag is a big, big part of that. We'll talk a little bit about that. And actually, we're going to segue into it right now. So tax drag is the wealth draining resistance of taxes on your investments and your earnings that cost you cash today and robs you of future compounded earnings of those lost dollars. So $10,000 in taxes at 8% interest compounded over 10 years, you've lost a whole lot more than $10,000, guys.